Celebrate this beat.
Bang bang bang, do those. Aye, bang bang bang, aye. The situation for the country, ole gone. It no easy for my people, oh, ole gone. Oh, would they blow like flute, yo, ole gone. May they live out for the youth to come, wale shama. They say the day we come when my people go provoke. And when the day come, government to fit it chop go. Everybody don't realize say everything a bobo. Miss a politician make you know it will rock my boat. Oh. And our leaders them funny. Why yo? Or they care about this money. Why yo? They just they play us. Why yo? See as them just they loot it, they go. Why yo? I wish that situation be easy for me ask. Where the people where they rule us so they equal to the task. Even for class, students they brand it for their pass. Are we supposed to be first, but now we they carry last. I read light and water and food in a day. And them say we could trust and obey. See as they make my people suffer every day. Yeah, they won't rule us again. The situation for the country, ole gone. It no easy for my people, oh, ole gone. Oh, would they blow like flute, yo, ole gone. May they live for the youth to come, wale shama. Every day person we be the leader of tomorrow. But at the matter can they go, we don't know who gets tomorrow. We don't know. Nigerian are suffering and smiling. Everybody are dying. Everybody are dying. African government don't care about the people them. Sometimes they see it and I wonder how I do them. Ebezumet everywhere, them don't care about the picnic them. No water, no power, the masses crying everywhere. We need some inspiration. We tired of the desperation. Man, I tell you, we need a solution. Our leaders them funny. Why yo? Or they care about this money. Why yo? They just they play us. Why yo? See as them just they loot it, they go. The situation for the country, ole gone. It no easy for my people, oh, ole gone. Oh, would they blow like flute, yo, ole gone. May they live for the youth to come, wale shama.
It's STG.
Ole gone. Wale shama, oh.
Am I good? Hello, everyone. Welcome to a special edition of West Africa Weekly Live. My name is Waimi Lube, and I'm your host for tonight. We are so excited to share something new with you. We've been working on this for quite some time now, and we're really excited to unveil something that will change your mindset when it comes to news and information across West Africa, the new West Africa Weekly website platform. But before we show you the new West Africa Weekly website platform, let's take a moment and go through the journey of the old West Africa Weekly website. The old websites did serve us well, but it is time to change. It is time to start something fresh. It is time to start something new. Let me introduce you to the new West Africa Weekly website platform.
Okay, thank you, Amy. My name is Darren, and our top line is Tumba. Let me dive into some of the key features of the newly redesigned West Africa Weekly platform. First of all, is one of the important feature to us was the personalized user experience, where our new platform remembers your preferences and tailors content to your interests. There's also seamless navigation. So we understand that a lot of viewers tend to consume news on their mobile phone. So whether you're on a desktop, a tablet, or a smartphone, the website adjusts perfectly to your screen size. So whether it's portrait or landscape, it does. You can also see this video integration. So part of our phase, this is phase one, which is the online platform design itself. But part of our phase two will include a lot of exclusive video content. But if you currently right now go to our westafricaweekly.com, you can see we have video content available. So you're going to be featuring a lot of interviews, documentaries that brings you closer to West African stories. And to me, the favorite part of it is the dark and light mode. I'm someone, I know a lot of people probably would agree with this. I love dark modes, whether it's my browser, my phone, whatever app I'm using. If it doesn't have a dark mode, I'm not using it. So one of the key features of the West Africa, newly redesigned West Africa Weekly is the toggle button that allows you to switch between dark and light mode. And one thing about dark mode is it helps reduce screen glare, making it comfortable to use in, whether it's at night or very low light. So we're excited. Look forward to phase two, where there's going to be a lot more rollout from the digital content side of things. Back to you, Amy.
All right, thank you very much, Otumba. And then, if you don't know who this is Dari Ayashola, aka Otumba, the COO of West Africa Weekly. Now, let me introduce you to someone you may or may not know, someone we love, we appreciate for all his hard work, the founder of West Africa Weekly, David Ondayen. Hi, David. Can you hear me? Are we good?
I think he's muted. He needs to mute
Yeah,
himself.
I can see that he is muted on my side. and he's going on and off.
Hello.
Hi,
Hey,
David.
David.
Hi,
My
Wavemy. Hi, Derek. Hello. Can you not hear me?
yes,
Yes,
we
you're
can
audible.
hear you.
Yes, go ahead.
Okay, so please go over it again. I lost you for like a minute or so there.
You didn't miss anything. We were just introducing you and giving you all the hype that you deserve.
Right. Okay. Well, yeah. So, good evening, everyone. Nice to. My saying nice to meet you. I mean, I've been meeting with you guys for like 3 days now. So, so yeah, it's
Right.
definitely not nice to meet you, but nice to meet everyone else who's joining. Um, I hope everyone has actually read the first exclusive story, which is published today, and I hope everyone is having a look through the website. There are some nifty features that people might want to take advantage of. There's the whistleblower feature, so you can actually submit tips, story tips, and documents, and anything that might establish a story that you think is important. Previously, when it was just a Substack platform, there were limits on things that could be done. But now, thanks to the hard work of Dare, Waimi, and the others who I'm sure don't want to be named just yet, here we are. So I'm
Yeah.
very proud that we're finally at this stage. We're actually just starting. Um,
Thought of
so
something new
I encourage
and for
everyone to make use of this thing.
50
It's a
million
journey
youths
where
into the army.
yeah, that too. There is going to be quite a bit of audiovisual work done as well. In fact, as soon as this night, you're going to see some audiovisual content going up, some brand new audiovisual content which I've been working on. So fingers crossed for that. And yeah, I'm very proud. This is the culmination of several months of work, of investment, because this hasn't been cheap either. And I'm proud that we finally brought it to this point. So happy days. Is Kalu here yet by any chance?
no, Kalu is not here yet. But while we're Kalu, David, we have
Oh,
a
there
new
he is.
yeah, so we can dive into the news story that everyone has been dying to hear. The show is yours, David. Good evening from my side.
Okay, so I'm actually going to defer to Kalu on this one because I'm sure he's read the story. He's a financial expert here, so he's the one who's going to slice and dice it, in ways that mere mortals like us probably haven't been able to do. So over to you. Nice to meet you.
Yeah, same here, David. Congratulations on the new website. Good job, team. Nice to be here. So, interesting story, David, that I'm reading. And maybe I should try to give an overview just so folks understand how a bank's balance sheet and how a bank is financed or how a bank operates. This will give more context to your story, right? So, a bank, like any business, is financed by two major ways, but banks are very unique. When you want to start a business, you bring your own cash, your own capital. That forms what we call the shareholders fund. So you bring your capital. If you're going to start, say, a hiring business, or let's say you're going to start a publishing business, you bring your capital. That capital as cash is used to go buy a factory, buy cars, then those become your assets. So your capital is going to be on one side, then your assets are going to be on the other side, and those two sides must balance. Hence, you have a balance sheet that what you bring to the business has to equal what you then buy as an asset. So when you make a profit, that profit it's now based on the returns that you have brought in as capital. Banks are a bit different, right? Bank investors, the first guys that start the bank, bring in their own capital. That's going to be on one side. But banks then take deposits from customers. Those deposits that come to the bank from customers, quote unquote, are liabilities to the bank, but are also the assets of the bank. So when you give your bank 10 naira, that 10 naira is you are giving it to the bank. The bank will take your 10 naira and will trade with it. So the bank creates what we call risk assets or loans from your 10 naira. It then becomes the bank's assets. So those two sides of the balance sheet, like we said before, you bring in your money on one side, the bank buys assets on the other side. With a bank, the bank's promoters bring in their own money. Then depositors' funds also come into the bank. That fund, the total fund that's available, is then lent out. That's the business the bank does. It lends the money out and then it earns interest on that money that's been lent out. So the bank, in effect, is using your own money to trade. Banks are a bit different. So this means that if the bank lends money out and the bank loses that money lent out, it cannot go back to the depositors. It has to go back to the promoters and ask for more money. So when you see non-performing loan, what has happened is that a bank has taken money from depositors and lend it out to customers, but the customers have not returned that money to the bank. So you have a hole in the balance sheet because both sides don't balance. You have the depositors' funds in one side, it's lent out on the other side as an asset. But because it's a non performing loan, that asset becomes a hole, so it can't come back in. So the story that you've presented, David, is basically a story of a non performing loan, quote unquote, type bank, where you have on one side now, you still have the deposits of the customers is still going to be there. The deposit at the bank, say, million naira. The promoter's funds is still going to be there. They must have brought maybe 500,000. Just numbers out there is still there. The loans are also still going to be there. But when you open that loan up, you're going to see zeros. So you can have a zombie bank where it's existing, but there's nothing really alive in there because the loan portfolio is non-performing. If you try to call those loans back, you will get nothing back to you. So the two sides of the balance sheet do not balance. Central Bank of Nigeria and regulators are always very, very careful that when banks do business, you don't create a zombie type loan portfolio on one side that doesn't allow both sides to balance. So that's what happened so you see Silicon Valley Bank. Once your assets on the other side does not balance with what you have from the depositors and the promoters' funds, the bank is not balancing. Hence, something has to happen. In this case, you cannot go back to your depositors. You always have to go back to your promoters and say, hey, we've lost money. We need to bring in more money to cover the hole that we in the bank have created. So, with that basis, if you look at the story you have presented, where a bank has, if based on what you're saying, the bank has lent out funds to customers, and the customers have not paid those funds back, they've now created a non-performing loan hole. And if you allow it to exist, then the bank is simply, like you said, has a negative shareholders funds. You see, because they're going back to the shareholders, not to the customers. But where do the customers get involved? If there's no shareholders funds, then the bank can't survive because every business survives on cash. The bank and the business only dies when there is no cash. The loans that have been given out is cash going out. If cash does not come back in from the shareholders, then you have quote unquote a zombie. And we all know what happens to zombies in the movies. In the end, the zombies all become as they are in the movies. So that's just a synopsis. The numbers are there, but I think it's an interesting story of is it I mean, David, I'll let you ask the questions from here. But that's what to give people. So when people read the story,
Just
they
the
can,
what I guess what caught my attention more than anything else was the reality that despite the fact that the financial sector is supposed to be one of the most tightly regulated sectors, if not the most tightly regulated sector in the whole Nigerian economy, someone can buy a 200 or a 400 and something billion naira loan portfolio for 6 billion. And somehow this transaction past compliance, because obviously these transactions don't just exist. They don't just happen without the knowledge of the regulators. They are too big for that to be the case. So clearly, the regulator must have known about this, and the regulator let it happen. That's incredible to me.
Yeah, it's I did read that part. I mean, buying a bad loan portfolio is quote unquote legal. It's what is called off balance sheet. I come to you and I say you have debtors owing you. So I want to call factor your debtors. I buy your balance sheet or your loan and I give you cash. That's okay. The problem is what I saw in your report is what they bought it for, right? I'm seeing they bought it for pennies on the dollar. So you would buy that if the loans are lost and completely doubtful. So the bank is trying to say we're going to close our books here and just move on. Because in our estimation, we can no longer recover those loans. So if I buy them for kobles on the naira, I'm saying I can go after those loans. That's if I am the guy that bought the loan book from the bank, I want to go after the debtors, get my funds back. That's how I make my profit, right? Because AMCON can't buy all the toxic assets. So you want to do your own private deals to take toxic assets to your balance sheet. So essentially what we're seeing is that the bank is saying that the lending, arrangement and how they look at their risk management was faulty at a point in the bank. And what did alarm me was not what has happened in the past, but what is still happening. I think it's the way you wrote your article reads is that this is an ongoing. So I would have forgiven the past and said, okay, that's why we had AMCON, because most Nigerian banks had an issue with toxic assets all across the world, loans that don't generate returns back to the shareholder. But if it's an ongoing issue, that's when we then have to say, okay, what are we doing about this? Are the same insiders still trading with the depositors' funds and not making sure that those loans are performing? It's one thing for a customer not to perform on a loan, but for a director not to perform on a loan, if what you're writing is accurate, and that's really going to be a red flag for regulators. And of course, it's the thing with banking is it's all connected. You can't say that bank has failed. If that bank fails, there's a run on this bank because it's somewhat people tend to say, well, the banks are shaky. So it's a systemic risk issue. So when you do a stress testing, you are stress testing the system, not just the individual bank. The biggest bank in Nigeria is many times more capitalized, but it would feel a systemic issue if a bank in the largest economy in Africa does go down because of insider trading. Then, of course, everyone starts to ask, oh, are all the banks good? Are all the banks well capitalized? This is now the risk that we run, that people tend to ask questions. And even when there's nothing, those questions slow down commerce and then lead to doubts, mistrust. And of course, it then shows up in the stock market as lower valuations. That's essentially what's going on.
So this it's very interesting you mentioned that, because I've always had the impression, whether mistaken or correctly, that banking at its heart, or modern banking, um, at its heart, it's sort of built around a core of confidence, essentially. So the bank exists and is useful because there is some measure of confidence in it. And the
Mm,
minute it loses that confidence, even if it's JP Morgan, as big as it is, it
mm,
will lose everything it has. And now
mm,
I'm not sure I'm 100% correct in thinking that. Obviously, I stand to be corrected. But where I'm going is, in the event that we were to witness that sort of SGBN scenario in Nigeria once again. Hopefully, it doesn't happen.
mm,
But in the event that it
mm.
were to happen, do you think AMCON even has the required liquidity to even fix such a problem at all?
For the whole system or for the bank in question? I would say for the bank in question, I'm trying to pick my words here. In Nigeria, we have what we call, in America and Nigeria, we have what we call systematic important banks. What we call that banks that if they fail, they pull the system down. So we have systematic in effect, banks that are too big to fail, right? So I'm not sure if that particular bank would be too big to fail. what you rightly said at the beginning is banks sell trust. That's what banks do across the world. Trust. Because when you take your money to a bank, you are allowing that bank create capital. No bank in the world creates capital from the deposit in its vault. When you go to JP Morgan, you give JP Morgan a dollar, it allows them create capital for someone else in the economy. And you only give JP Morgan a dollar if you trust JP Morgan. So if you don't trust them and you don't give them a dollar, they can't create capital. Without capital, even the good and the bad businesses fail. So in 07, 08, when we had the global financial crisis, it was a credit problem. The banks didn't trust each other, so they refused to trade on guaranteed interbank placements. And of course, the whole plumbing then got locked up, and no one could borrow, no one could lend. Then you had the recession. From sale of subprime mortgages in California led to the failure of banks in Switzerland, to Nigeria, to Thailand from California, because banks are now interconnected. So that's when banks, the central banks across the world, then do what we call stress testing, Basel II, having more capital. Going back to my example, you have to bring in more money to do the business of banking. And as you do more business, you have to have more reserves to protect you should you go down. So the question is like, the reserves of this particular bank, can they cover their losses? We've seen that they sold it for 6 to 280, big hole. The shareholders are on the hook, right? The shareholders, which includes the guys that bought the shares of the bank, those guys are on the hook. Can it seep out of that bank into the larger economy? It depends on who holds maybe bonds of this particular bank, how connected those bonds are to the other banks. If there's an exposure of this bank's instruments in the banking sector, then you see a run. If there's not much exposure in terms of who's lending money or who they are lending money to, then you sort of can curtail this and deal with it. The central bank of Nigeria has been able to, in many instances, curtail banks, ring-fence banks, and deal with them. There's a large bank in Nigeria, one of the top 5 in Nigeria, that went through this exact same issue we're talking about, David. And the central bank was able to go there, do a change of management, insist on a recapitalization of the bank with shareholders' funds, and now the bank is seemingly out of the woods and doing better. So, and that bank was a systematic, too big to fail bank. Central bank could not allow that bank to fail. So unless we open up the onion of this bank and see where are they placing money in and who is placing money with them, then we can answer if it's systematic. But your sentiments are correct. It's trust, and without trust, you then have a bank run and implosion and all that. Yeah.
I'm going to put you on the spot here. Do you think we simply have too many banks in Nigeria? And the reason I'm asking this question is in an economy like the US, which is obviously many multiples the size of even the entire African economy, the US has maybe 8 or 9 national banks. Obviously, it has thousands of smaller regional banks, but the big national banks. You can think of maybe Citibank, Bank of America, JP Morgan. They're just a small handful of them. In Nigeria, we have what 30 plus deposit money banks for an economy which is basically $480 billion or so. Do you believe we simply have too many banks, or
I think the problem, David, is credit, not banks. I think the problem in Nigeria is that Nigerians look at banks as the only source of credit, because the way the licensing in Nigeria, the way the financial sector is set up in Nigeria, banks seem to be the only source of credit in the economy. And that's the problem. There's a company called EFINA, Enhancing Financial Inclusion in Nigeria. I think that's their name, if I get that correct. They do a poll of financial inclusion access in Nigeria every biannual years. The last one I saw, the total number of Nigerians that have ever accessed a bank loan out of the total banking population in Nigeria that have ever accessed a bank loan is less than 5%. 5, 1, 2, 3, 4, 5. So the issue is not the number of banks, it's the access to credit. Nigerians don't do credit lending. We take salary, it's paid to the bank, we withdraw from the ATM, we spend on ATM cards. The average Nigerian, doesn't go to a bank to take a loan to buy a laptop or to buy a car. We don't do consumer finance. It's very rich 1% that go to a bank and finance a house in Lekki or we don't have a mortgage in Nigeria. We have loans to buy a house, but we don't have a 30-year fixed mortgage. We don't have all that in Nigeria. So the access to credit is the problem. If you have 100 banks with the same structure in Nigeria, or you have one bank with the same structure, the credit isn't going out. That's why we've been clamoring for the telcos to come in and do banking to compete with the banks. If the banks can't get credit to Nigerians, let the telcos do this short-term money lending to Nigerians. You go to the market, there's Ajo, the market may give a guy money every day, and they can go to that guy and get a loan instantly, no questions asked. Those guys are more penetrated in the economy than Nigerian banks. There's a guy called Baba Ijebu. You might not notice him because you're an elite, but if you go with your driver or your cook and you look at certain corners in Lagos, you see some guys gathered around the little red box. That's Baba Ijebu. That guy's turnover is more than many banks in Nigeria. And this on trust, people give that guy money to bet. They come back and they don't ask for risk reports and all that. But that guy is penetrated more than many Nigerian banks. So the problem is the credit. In the United States, if you want to get a mortgage, you might go to JP Morgan, but later on, who buys a mortgage is going to be a loan lender. There's Rocket Mortgage, there are mortgage finance banks. There's lots of ways you can get credit outside banking in the United States, in the UK, across the world, right? Credit unions, mortgage building societies, online, fintechs, they have lots of ways. So the problem in Nigeria, David, is the credit, the access to credit. What's a bank without credit? That's a club. If we have a bank and we can, then it's just a club. So if you say you have a bank, but you give out loans, your next report, you should try to investigate the breakdown of loans to Nigerians. If I earn 0 to 100,000, do I get a loan? If I earn $1 billion, do I get a loan? The result won't shock you, but you'll find that the poorer you get, the less access to credit you have. And that's the problem. Without credit, if you look across the world, the richest cities in the world have ports or banks. Look across the world. You either have a port or a bank, then you're a rich city. The richest cities in America, Seattle, San Francisco, that's Austin, right? Same thing, port or bank. London, Paris, Luxembourg, the Swiss guys keep your money so they don't have a port or a bank. But it's literally that, port or bank. That's how you make money, unless you have crude oil, but port or bank. And in Nigeria, we have ports, but we don't have banks. That's why we're not rich.
So, assuming you are in a situation where let's say you are a compliance officer in a bank in Nigeria, or let's even say you're an external auditor, and you happen to come across information that shows that the balance sheet is not balancing. Let's put it that way. However, there's an obvious power imbalance there. This conundrum has always confused me because, to my understanding, the bank itself is required by law to actually retain external auditors to prove that it's not breaking the law. However, it is paying those external auditors. So to me, to my mind, it seems as if there's an implicit conflict of interest already implied there. I might be wrong about this. So what I've always wondered is, um, what exactly does that external auditor or that compliance staff do when they come up, against this sort of thing, where someone discovers that there's a 400 billion naira hole in this bank's finances, and this bank is potentially about to be sold to another bank and become a toxic you know load around someone else's neck. What exactly do you do in that situation? Because it seems as if you're not a bank chairman, if you're not a bank board member, you don't actually have any power over the bank except you're the regulator. So what exactly are those guys supposed to do?
Well, audit is a very, again, interesting sport. Like I said, how the banks use your funds to trade. An auditor's job is to review the finances you have prepared. No, most people think auditors go in to find fraud. No, an auditor's job is to go and review the books and accounts as prepared by you. So an auditor will come to a company and say, hey, what do you say you do? You say, well, we say we balance books every day. We say we have this is how we record our assets, this is how we record our liabilities, this is our chart of account. You will tell them. The auditor will then go and review what you have told them and give a report and say, you said you do this, we confirm you have done this. Then they give you a pass mark. Now, the auditor could say, you said you have loan portfolio worth 400 billion. Then we did a what's called a verification. We wrote letters to those guys and said, hey, confirm to us if you have a loan with this bank. And those guys said, we have no loan with the bank. The auditor will do what's called an exception report, will write a report and say, hey, when we tried to confirm these loans, we didn't find them. And the law allows the auditors to come to your annual general meeting and give an independent report on those findings. And if you want to change your auditor, the law says you have to state it there. You just can't sack an auditor. You have to put it in your books and say, we want to sack this auditor. So it's like a lot of speed bumps in the way to say you can't remove an auditor. And it also has powers to give a speech at your AGM and say, we tried to do this, we didn't find this, and all that. And you are allowed, now the CEOs have to sign off on their annual reports. I think chairman and CEO have to sign off on the annual report. So what the central bank is doing is saying, hey, we're tying you personally to what you say is a financial report. Then the auditor is going to review that financial report. If the auditor says what they saw is what they see, then that's it. Then later on, if I was an investor, I could pull up the auditor's report and say, well, you said you saw this, but the market is saying they saw this. What's going on here? In every bank that has failed, I doubt there's ever been an auditor report that says this bank is going to fail. And I'm talking globally. I doubt you would find any Silicon Valley Bank that failed and when they were well capitalized. If you look at the auditor's report, nothing wrong with them. Signature Bank that failed, nothing wrong with them, according to the auditor's report. So the auditor's reports give you, it's more like I said, it's what they say they have done. And you see some point that the auditor will say, well, we found this problem, we found that problem. If you are an investor, it's much better to read the management reports and the notes in the accounts that the company itself prepares. Because what companies try to do is to remove liability by saying we've put it out there. So most times, if I don't disclose something, I'm guilty of withholding information that you, as an investor, could have taken to either sell the stock or to buy the stock. So I'm guilty, I'm liable if I don't disclose. But if I disclose that, listen, I don't think I'm going to make money next year. And if you look at the bank's annual report or any annual report, you'll see risk page. There'll be a page that will say risk factors. And it'll tell you the risk is that there will be agboros. The risk that there will be power supply failure in Nigeria. It's literally there. They will literally tell you. Because once they've told you, you can't then come and say, well, you didn't tell me Nigeria doesn't have power supply, which has made my cost of operations go high. That's why they put the risk report in there. So if you read the notes carefully, and it's really going to be in small print and hidden, and if you read the management reports, you'll see a lot about the bank's operations that should guide you, right? I looked at the bank right now before we logged in. I just looked at the bank's website. The bank had its risk rating, and it has risk rating from the best risk rating companies on earth. They were all on GCR and all that. You see the funny thing, those ratings were dated 2018. This is 2023. The bank has kept them there. Why? What is it could be that people just maybe glance at it, oh, they are rated. Don't look at the dates of the rating. But the bank put the rating there, 2018. It's there in black and white. But most people are just fast readers. Oh, is bank rated? Yes. By who? Oh, by this company. Oh, this is good. The bank rated. End of story. When you read it, it's 2018. So investing is a participatory sport. You can't rely on what any auditor says. I'm talking about not just this bank, any auditor. You can, ExxonMobil, not Exxon. the bank that failed in Texas, Enron. Enron was had no auditor problems, and the auditors were later on shredding files in all night shredding sessions, right? So, but they had no, they were the best company of Fortune 500 quoted, very innovative company. Look at the lady Elizabeth Holmes,
Yeah,
no
very
audit
honest.
report. Yeah, no audit report. So you got to be careful out there. I mean, again, again you said, who pays the auditors? I don't think it matters because many auditors have come out to say, some auditors do come out and say this is actually a problem. There's a new trend, David, of guys are what we call them like Heidelberg. They are, what's the word for them? They are short sellers, but they come out and they reveal malfeasance in the company because they want to make money from it. Those guys seem to be better at unearthing issues because they will come out and say this company is a fraud because they want to make money off the sale. So Heidelberg is one, and so that's what's going on. So in an efficient market, you can't hide, but in an inefficient market, even if the regulators don't get you, the market will get you. You can't survive as a zombie bank forever. If you look at the stock exchange, no matter how bad you think it is, look at the stock exchange. If you're a bad bank, it will show up there.
That's very illuminating. I guess my final question here will be a more general one, and it's a question of regulation. Now, I think it's to be fair, we also have to give the CBN and AMCON and the NDIC some measure of credit because, um, to the best of my knowledge, for the past 16 years, it is now, or thereabouts, there hasn't been a single deposit money bank failure in Nigeria. It simply hasn't happened, which I believe is the longest, correct me if I'm wrong, but the longest single period without such a thing happening. I think maybe since the military era. So clearly there has been some progress made, at least with regard to the robustness of regulation. But clearly there is still some sort of regulatory gap somewhere. So if you were to be in that AMCON boardroom, in that NDIC boardroom, in that CBN boardroom, and you're watching this thing play out and unfold, what regulatory changes do you think you would make? I don't just mean in terms of obviously the political will to intervene, because obviously that's a whole different kettle of fish, but just on an institutional basis, in terms of something which can be written down and actioned, regardless of whether anybody wants to do it or not. What changes would you recommend that could prevent this sort of scenario from playing out again?
Mm. David, so I always make this point that there's no law in Nigeria, or there's no law that Nigeria does not have. We have the best laws in Nigeria. Our banking laws here might even be more superior to the American banking laws. Do we implement them is the issue. There's a law that says that already specifies how much a director can borrow, and there are guidelines on if you breach that, what will happen to you. So there is nothing new that you're going to introduce to the Nigerian banking sector. We already have all those laws. But regulation always looks in the past. Something happens, the regulators step in. The only real change that you might say to say, can we have more forward guidance? Can the regulators be a more of, say, forward stress testing and to say we can anticipate issues more by looking at born indicators? That's where you can start to say, okay, can we foresee this? If we see a trend happening, can we step in quicker? Can we spot the issues faster? But if it's that what regulations, no, it's already there. Even on your article, you put it there. The CAP is already there. So all you need is if you're a CBN governor today, I don't think anything you are saying is new. If you are a core bank treasurer, reading what David has written, I don't think you are surprised if you're a core bank treasurer, right? So if the laws are there, maybe they're not implemented, but the one thing I want to see change is the forward guidance, the getting ahead of the game and then taking action before stuff happens. Signature Bank, okay, let's use the US example. Signature Bank in the US, they had a liquidity problem, but they were shut down. Even the Silicon Valley Bank, that happened. What did they actually do wrong? You know, They took money from people and bought assets. That's what they did. It's not that they bought a private jet. No, they took the money from people, but they bought an asset that the value of the asset did not rise as fast as the market. Make it as simplistic as that. And the central bank said, if anything happens to your bank today, because your balance sheet is not balancing, we're going to be on the hook because you've taken money from investors and it's worth maybe 1 billion, but the value of the liability is maybe worth 5 billion. We're going to shut you down. But the point is, David, if they simply wait, the value of those assets are going to go back to 5 billion. They bought bonds. The bank bought bonds that were paying a lower yield. If they simply waited, the bond will go back to their true value. But the central bank there says, we don't want to wait. We don't want to take the risk that something will happen. So we're going to shut you down. This is the point I'll come back to Nigeria with. Forward guidance, taking proactive action. Why you haven't had failures in Nigeria is because the CBN and the NDIC and the AMCON have taken proactive action in Nigeria. That's why you don't see the bank failures now. They've gone to some banks and said, hey, we don't like what you guys are doing. We clean you guys out, new management, we take over, we'll put you on a receipt. That's why you don't see the failures. In the past, the bank will fail, then NDIC will go in there, then police will arrest people. But now we're being a bit more proactive. Maybe more of that. That's what I'm trying to say. More of that. The laws are already there. Implement the laws, but more proactive. It's more IT to support these issues before they coalesce and become a cancer. Yeah.
Thank you very much. That was an extremely educating conversation. I think Dari wants to come on. He's
Yes. Thank you. Yeah. Hey,
as well.
yes. Hey, thank you so much. I do have a question because I remember a couple of days ago, 30 cents on Twitter. Twitter had a list of, I think they
I think we've lost Dari.
January and September 2020.
There he is.
Sorry, I'm back. Yes. So okay, sorry. Let me start again. Studies.
We've lost him again.
Data speed, infrastructure.
Yeah, that's a problem constantly. Is Waimi there? Because we're actually coming to the end of our time. So, there she is. Waimi?
Yes, can you hear me now?
Yes, over to you, please.
Oh yeah.
Hey. Okay.
Sorry.
Back.
Am I back? One.
So I'd let him finish, then I take it up.
Okay, Dari, I can see your eyebrows moving, so I think you might be.
Yeah, sorry, I don't know what's going on. I don't know about talking about network. Let me put it like other people. But on the more serious note, so I said Statistics listed Unity Bank as number 8 in banks with the most profits after tax in January and September 2023. I think they have a tweet from November 20th. How is that possible? So what's to me, I'm confused there. So where a bank is operating with negative shareholders funds, yet we know they're giving out a lot of bad loans. Yet they are reporting this bank as having 47.9 billion profit after tax. Who is lying? Because someone is lying. The question is who's lying. So how do we?
Not really. I mean, profits and loss is in a separate book from assets and liabilities. So remember what I said, a bank or any business only fails when they run out of cash, not when they make a loss. If you make a loss, you can be in business forever. If you make a profit, you can be in business forever. It doesn't matter if you make a profit or a loss. But once you no longer have cash is an asset on the balance sheet side. So what I'm saying is that a bank can make a profit with negative shareholders' funds. Not a problem. It can simply give a loan out and the guy has paid back that loan, or he took deposits funds and bought treasury bills. If I take a fund from you at 1% and I buy a treasury bill at 16% and I invest 4 billion in that trade, I'm going to make a profit, huge profit. But I still have a big hole in my balance sheet. So 2 different books, yeah. And until you run out of cash, like Warren Buffett to say, When the tide goes out, then we'll see who is swimming naked. For now, we're all in the swimming pool, so we're all covered up. But once the water runs out, then we can tell who is swimming naked and all that. That's really what's going on. Yeah.
Oh, thank you for your answer. Thank you. Back to you, Amy.
All right. Okay. Thank you very much, Kalu. Thank you, David. This has been a very interesting conversation. And I want to believe our audience, they also feel the same way. We look forward to having more conversations like this moving forward. Thank you so much for joining the show. Please follow us across all social media platforms at West Africa Weekly. We would love to hear your opinions on our social media platform. This is just the start of something amazing, and we would love to carry you on the journey. Right, guys? Are we bringing people on board on this journey, or is just the four of us doing this? I can't hear Otumba. I think Otumba's mic is muted.
Sorry, yeah. I was gonna say it was good having you, Mr. Calloway. There's a sharp contrast between seeing you in video and your Twitter profile. No,
We'll
it's
see.
in person, but yeah, it's you. It's good to hear your voice and put a
Very,
face to
very
it.
nice to hear from Kalu off Twitter space. How to put a face? Good God. Very.
If there's if there's ever a Nollywood movie where someone needs there's a Washington stunt double, I think we found him as well.
Right.
Yeah.
Oh,
Yeah.
that was good.
All right, so thank you very much, Amy. Thank you, Dari. Thank you very much, Dr. Kalu, for actually agreeing to be on the show. We're very grateful, and let's do this again sometime.
Right.
You're welcome. Thank you so much, guys. Wish you guys the very best.
Thank
All
you.
right, thank you.
All right, guys. That's the show. Conversation with Kalu Aja. I hope you learned something. I hope this opened your mind to so many things. The conversation still continues across all social media platforms. Do well to follow us on Twitter at West Africa Weekly, Instagram at West Africa Weekly, and Facebook at West Africa Weekly. And we hope to see you soon on the other side. Have a great evening, everyone. Goodbye.